Okay, very good morning. Hope everyone's had a good weekend. It's Monday the 15th of January, so having a bit of a recap of the major news from the weekend, a look at what to expect from today, and then for the week as a whole. A couple of things definitely on the agenda to speak about. First of all then, just getting straight into the charts this morning. Going to have a look at the euro currency to start things off. You'll see that both major pairs are in slight positive territory, if anything outperformance of the euro currency comparative to cable. We're up around 31 pips or so there. The dollar index remains subdued, and you probably would have read already in the morning's press, the dollar at a 3-year low at the moment, and consequently then the flip reverse for the euro dollar currency, and we start looking at this on a longer dated daily continuation chart. You can see here having last week broken above the key kind of highs from summer of 2017 or kind of August, September time. An extension of that move puts us all the way back to the highest levels we were trading since really December of 2014 now in the euro dollar pair. Quite a lot of calls from various banks been reading this morning talking about that there's not really a great deal to dissuade their thinking that we're going to see further gains here in this euro currency. 125, ING for one looking at 130 is not a matter of if but when, and obviously this is way up at this point here, which we would have been trading what would be, I guess, the summer of 2015. So it was really a 6-month period where you really saw quite a big breakdown in the euro currency of that year, but the premise of further upside definitely feels realistic for the euro currency, and certainly on Friday you had Angela Merkel reaching a preliminary accord with the SPD to form the next coalition government. This has been something which has been in a bit of a stalemate for a considerable period of time since we last had that German election, but over the weekend, do be aware, the SPD delegates in the state of Saxony-Anhalt rejected the potential for another grand coalition with Merkel's party by 1 vote. So it's not exactly a done deal quite as yet. But next dates to look out for: the SPD will vote on the preliminary accord in their final party convention on the 21st of January. So you're going to be looking to really next week when you're going to be looking for that to occur. In terms of near-term levels, I guess you've got that pivot level, which is around the 122 handle and the previous high points that we were seeing to really wrap up the week from last week on Friday's session. So it might be quite an interesting point if we get back down there to look at the long again. But first port of call would be a retest of the overnight Asia Pacific session support point seen around 122. 33 more short term. Having a look at cable, as I said, it's pretty flat really. There's a couple of things definitely we need to be aware of, and for one is you need to look at this chart on a little bit of a longer dated nature to look at and encapsulate the referendum move. So if I put it like that, you can see here that was obviously the EU referendum from June of 2016. We defined that low point really, which was one down at the 120 handle. But the recovery is what I want to talk about more than anything, because having got our head above that September 2017 high, so if we just highlight that, that was significant, and since then we've seen the price action after breaching that, continuing to push higher at the back end of last week, and here we are at 137.69 at the moment. Pretty big level coming up though, and that would be the pre-referendum low that was seen in 2016, would have been late February. That was at 138.35, again looking at daily charts here. And then Sam was just highlighting as well that if we do a fib from roughly around the high from the referendum itself down to the low, then that key level, as you can see, that was the 2016 low point, which was here, pretty much matches up exactly with that fib retracement at that 0.618 level. So A lot of people will be looking at that. That's kind of the biggest near-term barrier, and really it's not that far at all from where we are in current price action. Definitely well within striking distance for this week. Any material break of that level, well then 140 is your next target on the upside, and then that also of relevant significance to the previous price action going back to April of 2016. That was also just prior as well, a couple of days in the run-up to the actual referendum in itself. So that's also seen a bit of a push here. The last little push as well here in the pound. Don't forget, you've also had a couple of UK-related matters to do with Brexit. Obviously, at the end of last week, you had Germany, or not Germany, finance ministers of Spain and the Netherlands are considering a Brexit deal that keeps the UK as close to the EU as possible. So that's certainly coming from some of the bigger players. Germany, though, has been a little bit less willing to quite go down that line so far. But certainly Brexit talks need to be monitored, and on that specific front, later on today, you do have a couple of things to look out for, because EU negotiator Barnier is expected to meet with UK delegation led by Conservative MP Anna Soulbury and Labour's Chuka Umunna, the latter of which I'm sure if you follow him at all on social media, you'll know fully what his stance is in regards to pursuing a softer Brexit, if any Brexit at all. So that's the kind of longer term picture for cable. Definitely worth keeping an eye then on the potential on that upside level to be threatened at any point in the near term future, which I guess applying that into some of the intraday context would be up and around the R1. So as I said, certainly not that far away. Looking at a little blip in price action, this wick here, that was 11 past 6 a.m. this morning, I believe. And so, as such, this was nothing to do with any fundamental news. This was just a byproduct, some of the volume just picking up as UK and Europe came in. Nothing more than that to see at this point. One thing to keep in mind, of course, is that for today's session, you definitely should be aware that it is Martin Luther King Jr. Day. That does mean that it's a US holiday. And so volume this afternoon is likely to be much lower than usual. It does mean from a calendar perspective, the New York Stock Exchange is closed today. So I got my Mr. Equity looking at me, staring me down, wondering whether he gets a little bit of Dow action. Well, I'm sorry, Ilya, you might have to wait till Tuesday because the NYSE is shut, which means an early electronic close for Globex and futures. I will submit some of the time frames for that, but generally speaking, equity rates, FX energy products all halt on Globex at 6 p.m. London time for any of the guys trading the live market later. Okay, a few other news items, I guess, to be aware of. Sticking with the UK and Brexit theme, this is just one thing that's in the press this morning. Tory rebels to pass battle over May's key Brexit bill to Lords. So let me just give you the brief overview here. Prime Minister Theresa May's Brexit legislation returns to Parliament this week, where pro-European Conservative lawmakers who stung her once before will hold fire and leave the fight for more changes to allies in the upper house. So again, don't forget, this is the difference in the UK system between the lower and upper. The House of Lords, that being in the upper house, which are much more overwhelmingly anti-Brexit. So the more pro-European Conservative lawmakers likely to back Theresa May's legislation because they know the House of Lords have got more power, essentially. So the DUP, obviously those required seats needed to push through a working majority for Conservatives, they're likely to also back Theresa May. So this really shouldn't be too much of an issue. One thing that you are expected to hear, though, is that Labour Party's leader Jeremy Corbyn and the Scottish First Minister Nicola Sturgeon, they're likely to both oppose the bill in its current form. They've both said as much in the weekend's press. What this is to do with, if you're wondering, the conversations that are ongoing in Parliament, this underlines the challenges for the government in passing the legislation which aims to enshrine all EU laws in domestic legislation in order to ensure a smooth Brexit. Obviously, the other thing that was going on at the weekend was, I'm sure you've seen Nigel Farage, of all the newspapers in which Farage could appear in, it was an Observer exclusive, of which, if you know your kind of political leanings that the various UK national newspapers have, the Observer is obviously much more on the left-hand side of things. But Farage talking about the idea that Brexit could be reversed. And he was talking a little bit unsure about how to take his comments and what he's exactly up to. He's obviously, as far as his political views are concerned, but he's obviously an intelligent man who knows what he's doing and what he's up to, and his strategy and his ability to cultivate national sentiment is certainly his strong suit. But the fact he's come out with that has kind of divided some of the UKIP members as towards those thinking, my goodness, Nigel, what are you doing? To those thinking that, well, actually, maybe he's just trying to get back in touch with this national sentiment that helps secure, for a large part, the vote to leave in the campaigning in the run-up to June 2016. And maybe he knows that the likelihood of a second referendum is coming, and so therefore he needs to start bringing it back to the forefront. As I said, getting that kind of more anti-European sentiment back on the table again. So yeah, it's quite interesting to see how that plays out, but in terms of an actual price point and how this is affecting the cable currency pair, it's little to none, if anything. Looking at some other news flow that we've had, the Bank of Japan overnight raised economic view for 3 of 9 regions. This is a regular quarterly report that they've had, so underscoring its confidence over a broadening recovery. Bank of Japan's Kuroda did speak as well overnight, reiterated that the central bank will continue its stimulus program for as long as needed to achieve its price target. Obviously, this comes after some slight tweaks into what's called the Renban Bank of Japan operation. If you remember, I think it was last Tuesday, acted as a bit of a catalyst for a bit of a short-term bond sell-off, yield spiking on the back of some tweaks to long-end dated maturity bonds in their bond buying program, that they were buying slightly less, but this is seen more operational than any policy twist, and therefore Kuroda just reiterating that overnight, that the central bank in Japan will continue its stimulus program. The actual yen in itself is seen a little bit firmer. Let me just bring it into shot, we can have a look. It's nothing too massive in movement as yet. You can see here we're just close to retesting where late Asia price point low was at 110.22. But comparative to really in the overnight session, if anything, some slight yen strength was seen. But don't forget the dollar index is down about 1/10, with most of the major currency pairs seen a touch higher this morning. With the dollar a little bit softer still as well, gold continues to remain elevated, albeit it has pulled back a little bit since Europe has come in. But we still, in the grander scheme of things, look in favour for gold prices, and quite incredible to see us back up at 1342 now. So we continue to eke out some pretty solid gains, and if there is any near-term correlation, as cryptocurrencies in general seem to be just struggling a little bit with a lot of the regulation changes and so on that are going through in the likes of the Far East, in South Korea and China in particular. But gold through 2018 now, we've managed to get from really the a $1,300 handle up to where we are at the moment, about $42 higher. And a pretty decent push towards the back end of last week. So gold prices, let me just transition my charts here so you can see what I'm talking about. So Slight delay on my charts, but they should change over. The bigger level to look out for here is going to be September. So if we go back to what would be the 8th of September, 1358.5 would be that level. And certainly again that's within range as well for this week's trading sessions ahead. Looking at the equity market in the US, it's kind of copy paste repeat in one sense, because here we are, we're still up at these record levels. It doesn't really seem a great deal to make me want to change my mind that things are going to stay that way for the time being. I guess if we were to break the earlier low that was seen around the initial cash equity open in Europe, then pivot is probably another level of interest. But whether we'll get down to that point, given the fact that the New York Stock Exchange is shut today, is kind of yet to be seen. One thing is, I was looking at the FTSE statistically this morning. The FTSE has rallied for 6 weeks in a row as a statistical point. The sequence of weekly rallies is extended to 7 weeks only once in the last 21 years. So again, if the FTSE can manage to eke out another gain this week, the first time that would have happened in just over 2 decades. So statistically speaking, we're getting close to being outliers if that were to be the case. Alright, one other thing for oil traders I just wanted to touch upon was every Friday, of course, we get the latest Baker Hughes rig count. Now obviously we've seen some pretty decent upside in the price of crude, but we did have the rig count surge by its most in 7 months on Friday. So the rig count, as you can see here, it rose by 10 to 752 last week, which was the most since June of 2017. So has this had any impact on price? Well, no. I guess at the moment the movement on the upside is just taking precedent in terms of this ongoing trend. Let's just have a look back on the daily. Those levels we were looking at before here having broken through, and that previous low point at the back end of November of 2014 certainly I think keeps it technically more bullish for the time being. Even if we did get a bit of a pullback, we'd be looking for support back on that previous level of 62.56, the 2015 highs. So definitely worth keeping an eye on. Obviously if shale output does see a kind of rampant return, then certainly that will need to be taken into context. But the rig count up 10 I think is just being taken in its stride at the moment, and doesn't really make me feel any different to think that for the week it would be unsurprising if we finish even higher than where we are at the moment, so above the 65 mark. Okay, quick look at the calendar then. Looking at the calendar for today, it is particularly quiet. So as mentioned, given the holiday, there is, even in Europe, I mean, you can kind of scrap the Eurostat trade number. There is nothing coming out today in terms of economic data. So definitely you need to take that under consideration when you're thinking about strategizing for trades today, longevity of those trades, and probably technical levels will take greater significance in order to drive market direction, the lack of any kind of sparks from a fundamental perspective. Bank of England's Tenero speaks, but not until later on, 6:15, so outside of the session, and these are all of the times and the various exchange closes here on your calendars that you can have a look at as well here. Looking at the weekly calendar, there's a couple of things to be aware of. Other than today, really Tuesday is going to be the most interesting day, potentially from a schedule perspective at least, outside of the Parliament and Brexit talks. You're going to get UK inflation data. This obviously is going to be interesting for the point of view that we're tracking at 3.1%. I think from memory that's the highest since March of 2012 for UK headline year-on-year inflation. This being of a key level because the Bank of England at the moment are remaining confident that there isn't really any need for near-term interest rate hikes to mitigate that rise in prices, because their view is that this is around the peak and it will start to return to target in the future, given that this kind of one-off effect of pound depreciation and a surge in prices we've had over the last 6 months starts to dissipate slightly. So that's going to be key. Certainly if we are going to see a further breakthrough of that key level we were looking at in cable, then anything like 3.1% or 3.2% could be reason enough for a next little push higher, because I believe the expectation is for a slight drop of 0.1 to 3% on the year-on-year reading. So that'll be key. And then also you'll notice earnings season is now underway in the US, so we'll get most of the big bank names of a tier 1 nature coming out of the US, starting with Citi. Citi's earnings come pre-market on Tuesday. You've also got the German inflation rate as well. This is obviously another string to the bow of the Euro's resurgence. It's not just about Germany and coalition, things like that. It's not just about, as well, the fact if Netherlands and I think it was Spain want the UK still to be closely tied to Europe, which would be a net positive for Europe if that was to be the case, if the UK was still closely involved. But the economic growth story and expectations of return of inflation, these are all other reasons underlying the continued push higher in the euro currency. Looking forward then to Wednesday, we get the final inflation figures for the euro area, and then looking out for the US, industrial production, manufacturing production. Then you've got Bank of America and Goldman Sachs also release their pre-market earnings as well. Don't forget that when Citi comes out and some of these first ones, they tend to then set the precedents for the sector as a whole. So as we get down to things like Morgan Stanley, then the banking sector is kind of bedded in by that point when those 3 big names have reported. Other things we're looking out for is the Bank of Canada interest rate decision. It's going to be an interesting one, whether or not they hike rates again. And then you've got your oil inventory numbers. It's not on here, but just to be aware, just to be aware that it is on here. You've got the API on Wednesday, so the DOEs are on Thursday. So as per usual, when there is a market holiday Monday in the US, it means that the oil data gets bumped back a day. A couple of speakers as well to be aware of. Going into Thursday, this is really the big day for overnight in Asia Pac, and this is when we look to China to guide market sentiment. How is that economy performing? We're going to get growth data, industrial production data, retail sales, fixed asset investment. That's all coming from when we come in on Thursday morning. From a US perspective, we get a bit of a mix then in corporate earnings because IBM reports as well as Amex. And then going into Friday, finally, this will kind of round off what will be quite an interesting week, of course, for the UK, because how did the UK retail sector perform over the Christmas period? So not only do you get the inflation reading on Tuesday, you get the retail sales from the UK on Friday. With other thing, and probably the final thing to look out for of significance for this week is, of course, the deadline for the US government shutdown. Because if you think about it, all that's happened now, I think it's 2 times in a row, is the US have basically come together, made an agreement to just kick the can down the road for another couple of weeks. This is that couple of weeks. So Friday, potentially, the US government could shut down. Whether or not that will happen, so far they've managed to avert that. Likelihood, another short-term fix so that then they can have larger, more extensive debates going forward for a more longer-term solution is kind of what the baseline consensus is for that. So definitely a big tail risk to the end of the week. But so far, they've managed to avert an actual, if anything, a partial shutdown so far. All right, that's the brief for this morning then. So again, just to remind you, US markets are closed. Electronic trade is happening as per normal, but early closures on Globex. But that just means you've got to be a little bit realistic about your approach to today's session. Don't expect too much on the US equity side potentially, and T-notes which have been sideways overnight. Things I'd be more interested to look at is the Euro and the DAX potentially, given this inverse relationship they've had of late. if the euro continues to power on to these 3-year highs, be interested to see and mark out any downside levels of significance in the DAX index under that situation. Okay guys, have a good day and a good week ahead. Thank you very much.